Hello everyone, and how are you all doing today? So today we're going to be trying yet another question from the ACCA Performance Management past papers. The question we're doing today is from the June 2014 exam. It's question number 5 about a company called Valet Co. It's about the variance analysis, specifically the mix and quantity sales variances. Okay? Now, this is an older exam format, so that's why we have a question number 5 for a written question. This is prior to September 2016, okay? But it's still for 20 marks, so it's similar in that sense that even now Section C questions are only for 20 marks, okay? Now, the reason I picked this question is, 1, it has a few tricks in it. 2, it's testing sales mix and sales quantity variances, which are rarely tested in Section C compared to the materials mix and materials yield variance or the planning and operational variances, right? So I felt that this question would be good for practice, okay? So without any further ado, let's get into the question itself. As always, we're going to start with the requirement. So requirement for part A, for a total of 8 marks collectively. Using the data provided for full valets and mini valets, calculate the total sales mix contribution variance and the total sales quantity contribution variance. Now, if you remember from our videos, we need to make a table just like we do for the price mix and yield variation calculation. We need to make a similar table here, okay, where we have our totals. So, let's start by labeling question number 5. Part A, we'll make it bold. We don't need to worry about parts 1 and 2 within the question because we're going to be solving both of them collectively through our table. So whenever we have the mix and quantity variance table, what was the format? We have 3 separate totals with which we're concerned with. The first total, we're going to take the actual quantity at the actual mix and the standard price. Second total, we're going to take the actual quantity as per the standard mix into the standard price. And the last total, we're going to take standard quantity, or in the case of sales, technically it's the budgeted quantity, into the standard mix and the standard price, okay? So let's just move this down a bit because we're using shorthand to be clear to the examiner. As a courtesy to them, let's clarify what we mean by these shorthands, right? So A stands for actual, right? S stands for standard, or in some cases budgeted, or sometimes or budgeted, right? M stands for the mix, obviously. Q stands for the quantity, and P stands for the price, right? So we've clarified that. Now we can resume with our table. Okay, let's keep that over here. Okay, so over here in the rows we'll have the 2 types of products, which in this case are full valets and mini valets. So we'll put that here, full valets and mini valets, okay? And let's make all of these bold and let's centralize them because they're the headings. Okay, and let's make these bold as well to the side so that they all stand out from our numbers that we're going to use. Okay, so it's a variance calculation. So honestly, I don't think this information will be much relevant. We can go straight to the numbers, but to be safe, let's just quickly read through it and then we'll start. Okay, so it says Valet Co is a car valet or cleaning company. It operates in the country of Australia, which has been badly affected by a global financial crisis. Petrol and food prices have increased substantially. In the last year, average disposable household income has decreased by 30%. Studies have shown average car owner keeps the car for 5 years rather than 3 years, as previously was the case. Figures over recent years have shown that car sales in Australia are declining while business for car repairs is on the increase. Okay, so this will probably be for the analysis later. Valet Co offers 2 types of valet. A full valet is an extensive clean of the vehicle inside and out. A mini valet is a more basic clean. Until recently, 4 similar businesses operated in Valet Co's local area, but one of these closed down. Okay, one of their competitors closed down 3 months ago after a serious fire on their premises. Okay, Valet Co charges $50 for each full valet and $30 for each mini valet, and this price never changes. Their budget and actual figures were given as follows. Okay. Now, first the actual quantity as per the actual mix. This can always be taken simply from the question directly. So we have our actual numbers here and we have the numbers. So actual quantity for full valets was 4,000 units, and for mini valets is 3,980. Okay, so this we can take directly. Now, we need the actual materials as per the standard price. But is it going to be price in this case? So remember, we said sales variance is always calculated based on profit or contribution. If we go down below, they're clearly specifying it has to be based on contribution. So let's just change this so there's no confusion. I know we're used to the SP shorthand in our own videos, but for the examiner we need to be more clear. So contribution will be clear, and this will become SC, standard contribution, SC and SC. Okay. So what's the standard contribution going to be for full valets and then for mini valets? So here's what's interesting. They've given us the total revenue and total operating profit and total contribution, but they haven't split it up, right? So for the example, the actual figures, this is the revenue for both full valets and mini valets. This is the contribution for both full valets and mini valets. So that's the trick in the question. Because what most students would do is that they'll take the total contribution divided by the total revenue. They should be taking it for the budget because we're dealing with standard contribution. But the issue is then that's just the CS ratio, as in how much is the contribution for full valets, how much is for mini valets, right? The trick is that they've mentioned something down here. The budgeted contribution to sales ratios for the two types of valet are 44.6% and 55%, right? They've given us the separated CS ratio, so we don't need to worry about the numbers here. They've already given those to us. And if we remember correctly, we read this above, that Valet Co charges a price of $50 and $30 for each of them. So how does this all work? Well, think about it this way. The CS ratio is contribution over sales, right? And they've given us the selling price. So contribution per unit over selling price per unit. If we multiply that by the selling price per unit, we end up with the contribution per unit. Okay, so that's the trick on how we need to find the contribution per unit in this question. It was a tricky part, and a lot of students did get it wrong in the actual exam. Okay, but now that's why I wanted to do this question. Now you're familiar with this trick, so that if it comes up again, you'll know what to do. Okay, so we'll take the CS ratio for each product and multiply it by the corresponding prices. We couldn't have done that from the table up here because we didn't know the split of what's the CS ratio for full valets, what's for mini valets. Okay, let's show that working somewhere so that we can make it clear to the examiner how we got it. So we have full valets and we have mini valets. Okay, so let's put it down here. So their CS ratio was 44.6% and how much? 55%. Okay, and the price for each was 50 and 30. So we multiply these together to get the contribution per unit. Okay, let's just stretch this out a bit, and let's make these headings bold, and let's centralize them for presentation purposes. Okay, so this multiplied by this, $22.3 for full valets contribution per unit and 16.5 for mini valets. Okay, so we'll take 4,000 multiplied by 22.3 and we'll take 3,980 and multiply it by 16.5. Okay, so our total is 154,870. Okay, and this is total 1 from our calculation standpoint, and this total, the total number of units is 7,980. Why do we need this total? Because the next part is actual quantity as per the standard mix. So we need to do the standard mix splits. So let's insert it a few rows. So basically we made 7,980 units. Had we stuck to the standard budgeted mix, we should have made a certain percentage of these as full valets and a certain percentage as mini valets. So what's the standard mix? The standard mix in our question is, So we have full valets and mini valets, that we should have 3,600 full valets and 2,000 mini valets. So 3,600 full valets and 2,000 mini valets. So the standard proportion of sales, these total up to 5,600, is that the company expects to sell 64% of its sales as full valets and 36% of its sales as mini valets. So let's make this a percentage, right? Okay, but the proportions, as we can see, the actual proportions are closer to 50-50%. So if they had stuck to the standard mix proportion, then they had sold 7,980 units in total, and 64% of those were full valets. Approximately 5,130 would have been full valets, and the remaining 35.71% or 2,850 would have been your mini valets. Okay, and the total matches up. Let's just copy this over here. Okay, and this will once again be at the standard contribution, so 5,130 multiplied by 22.3 and 2,850 multiplied by 16.5. Okay. And finally, we have the standard quantity, standard mix, standard contribution. In this case, standard quantity is technically your budgeted quantity because it's a sales variance. And let's just be clear. Well, we've mentioned standard or budgeted, so we don't need to clarify too much, I guess. So this is still going to be the 3,600 and the 2,000, because remember, standard quantity is the same as budgeted quantity for sales. Once again, we'll multiply these by the corresponding contributions per unit. So we get these amounts, okay? And we can now find the sales mix variance and the sales quantity variance. Okay, let's stretch this out a bit. So the mix variance will be the first total minus the second, right? And the quantity variance will be the second total minus the third. So we have an adverse variance of 6,554 for mix and a favorable variance of 48,144 for quantity, right? Let's just be clear about that. Even though the negative sign does give it away, let's just mention that as well for the examiner's reference so that we're very clear. Okay, so that's done. Let's move on to part B. So 8 marks of calculation done. The main trick was again finding the contribution per unit. Part B, briefly describe the sales mix contribution variance and sales quantity contribution variance for 2 marks. Okay, now notice it's just a basic definition. So even if you had messed up with the calculation or weren't able to do it, you could still get these 2 marks, right? So please make sure to answer any analysis or description questions regardless of the calculation, because you can still get marks there. And honestly, students often struggle with the definitions of these variances. So let's just pause for a minute, and for recap purposes, let's talk about what the sales mix and sales quantity variances are before we describe them here. So sales mix variance, what is it? For example, in this case, we have an adverse sales mix variance. What does that mean? That whenever we have our standard mix in which we'll make a certain amount of profit and contribution if we sell on those proportions. So the standard mix proportions were 64% for full valets, 36% for mini valets. If we had stuck to that proportion, we would have made a certain profit or contribution. If we had changed that proportion, we would either have made a higher profit or lower profit than the standard mix, okay? When would that have happened? Let's go to our contributions per unit. Full valets make more contribution per unit than mini valets. In other words, they're more profitable than mini valets in terms of contribution. And that's what's going to happen here. So as we can see, if we had sold in the standard proportions, we should have sold 5,130 full valet services and 2,850 mini valet services. As it stands, we sold much fewer full valets than expected. We only sold 4,000, and much more mini valets than expected, 3,980. Approximately a 50-50% split rather than 64 to 36%. What does that mean? We sold less of the full valets, which were the more profitable product, and we sold more of the mini valets, which is a less profitable product, than we should have. And that's why our mix variance was adverse, because we made a less profit overall. If we had sold 64% of our sales as full valets, we would have made a better profit, and we would have sold then 36% of our sales as mini valets. That would have improved our overall profit instead of the 50-50 split. Okay, so that's mix variance. Let's just explain that part. So the sales mix contribution variance compares the contribution we would have earned under the standard mixed proportion of sales against the contribution we earned in our actual mix proportion. Okay, and let's just clarify that a bit more, even though it says briefly, just for our own understanding, right? If we sell a higher proportion of the more profitable product, the mix variance will be favorable. So if we have high proportion more profit as compared to the standard mix, as compared to the standard mix, and we can cut this part and put it below, the mix variance would be favorable and vice versa. Okay, so we've clarified that as well. Okay. After that, we have the sales quantity variance. Simply put, if we sell more than the budgeted quantity, this will be favorable. If we sell less, it will be adverse. So the budgeted quantity was a total of 5,600 units. We ended up selling 7,980 units. We sold more, that's why it was favorable. Okay, so the sales quantity contribution variance assesses if we sold more or less than the budgeted quantities. If we sell more than the budgeted quantity, this variance is favorable and vice versa. Okay, so there we go, part B done. Let's move on to part C. And now it says discuss the sales performance of the business for the period, taking into account your calculations from part A and the information provided in the scenario. So they're specifically telling you to link it back to the case, but you should always be linking it back to the case regardless of whether they tell you to or not. And this is for 10 marks. So I've been stressing this a lot, right? Calculations are only a part of the exam. Analysis also plays a major part. Now notice, just 8 marks for the calculation and 12 marks for the definitions and analysis. And what happens is most students are so caught up in the calculation, they disregard these parts and they make only 8 marks rather than focusing on the 12 marks, which would have given you a passing mark. So please don't ignore the analysis, okay? And even if it says refer to your calculations in part A, and let's say you screw up with the calculations and get them wrong, it's okay. Even if on your wrong calculations you make a correct analysis, you'll still get some marks for that, right? So please don't leave the analysis out regardless of whether you were able to do the calculation or not, okay? Now, we need to analyze the sales performance while taking into account the calculation. So we have the adverse mix variance and favorable quantity variance and the case scenario information. So all of this stuff, okay? So the best way to approach it is we'll read the case scenario and then link it back to the variances. So sentence by sentence, we've already gone through it, so we know there's bad things happening in the economy. So it says Valet Co is a cleaning company. Strapia has been badly affected by the global financial crisis, and petrol and food prices have increased substantially in the last year, and the average disposable house income has decreased by 30%. Let's stop. So the disposable house income has decreased by 30%. Can we link it to either of these variances? Well, think about it. If a person's income goes down, what's likely to happen? They're gonna start buying cheaper alternatives, right? And if we look at Valet Co services, they're $50 price for a full valet and $30 for a mini valet. So what's going to happen when people have less income is they're going to switch from the $50 more expensive valet service to $30 the mini valet service, and that's what's happened. So rather than 36% of people buying mini valets and 64% buying full valets, it's like a 50-50 split instead. So we can explain that accordingly. The country of Strapia has been suffering economically, and this has resulted in the disposable household income decreasing by 30%. This decrease would make people inclined to buy cheaper alternatives. This could be one of the reasons they preferred to buy mini valets over full valets. Instead of the standard split of 36% mini valets to 64% full valets, the sales were closer to 50% each. This means that they bought more of the less profitable mini valet service, causing an adverse mix variance for Valet Co. Okay, so 1 point, but we've written it extensively, thoroughly, so it'll get us at least 2 marks, right? Okay, now it says after that, recent studies have shown that the average car owner keeps their car for 5 years before replacing it rather than 3 years as was previously the case. So now they started keeping their cars for longer because they're trying to get more mileage out of a car rather than having to buy a new one because they really don't have the income to do so. What would happen because of that? Well, if you're keeping a car for longer, you want to maintain it, clean it more often, right? And has anything happened that would suggest that that's been the case? Yes, our sales quantity variance has gone up. We expected our sales to be for 5,600 units. Instead, they were for 7,980 units, meaning people are getting their cars cleaned more often. So we can link that point. Furthermore, people are now keeping their cars for longer, 5 years compared to the previous 3 years, right? This likely will make them take better care of their cars, including through valet and cleaning services, right? Hence, they will use more of these services, and this is likely one of the reasons for Valet Co's favorable sales quantity variance, as they sold 7,980 units instead of the budgeted 5,600 units. Okay, so again, some strong points made, at least a couple of marks here as well. Okay, after that it says figures over recent years have shown that car sales in Strapia are declining while business for car repairs is on the increase. So again, car repairs business is on the increase. This is further highlighted by the fact that car repairs as a whole are on the increase in Strapia, showing that people are trying to take better care of their cars. Okay, so we've linked this as well, another mark here as well. Okay, after that it says Valet Co offers two types of valets, full valet and mini valet. Full valet is an extensive cleaning. Okay, mini valet is a more basic cleaning. Until recently, 4 similar businesses operated in Valet Co's local area, but one of these has closed down 3 months ago after a serious fire on its premises. So what does that mean? Well, it means that if there's less competitors in the market, their sale, one person goes away, their sales will be split up between the other competitors. And that will mean their other competitors, such as Valet Co's sales, would go up once again, which goes with the sales quantity variance. So we can make some points here. One of the competitors of Valet Co has gone out of business. This would likely lead to an increase in the sales of Valet Co and their other competitors, right? Competitors. Okay, this can clearly be seen as the case since Valet Co had a favorable sales quantity variance. Thus, they were able to win over some customers from the competitor, no longer in the market. Okay. So technically, there's not much more information in the case. So if there's not much more information in the case, for most of the parts, they'll be happy with this analysis, as in they'll consider it sufficient. So we would have gotten like 2-3 marks here, 2-3 marks here, 2-3 marks here. It's around 8 marks or so. That being said, if you can stretch out and write more points, of course, always a good idea, right? So what other points could we write potentially over here? Well, now let's start thinking a bit outside the box. We've made 2 points about quantity variance, and that's about it, that the quantity has increased because of people taking better care of their cars and a competitor going out. What about mixed variance? Would either of these points about better care, well, better care not necessarily, but would either of the points of people keeping their cars for longer or for a competitor going out of business make sense for the mixed variance to be adverse? Well, Valet Co does not change their prices, right? And they have a $30 mini valet service. Okay. So is it possible that they started pushing their mini valet services more in order to win over the customers from that competitor? So they saw that that competitor went out of business and they started promoting their mini valet services more. Why? Because one, the market is down anyway, but two, they want to win over the customers. They want to go for the cheaper option because they know customers will go for the cheaper option, right? It's a bit of a stretchy point, but it can get you a mark, right? And what I want to just basically highlight with this is, no, you don't necessarily need to make this point. You'd still get like a good 8 marks already based on the analysis we've done. But it's always good to know how the potential that we can also make other points as well, right? So let's make that point. As can be seen from the adverse mix variance, Valet Co sold much more of the mini valet service than originally planned. It is possible that they pushed this service more given the situation in the economy and the fact that one of their competitors went out of business in order to win over more customers. Okay, so you'll get 1 or 2 marks here as well. And I think that's more than enough. We've covered all the main issues highlighted in the scenario. We've linked that to all the variances. We made 2 points for each variance. Okay, so yeah, there we have it. So the main trick from this question that you need to remember, if they don't give you the contribution per unit for each of the products, then they might have given you the CS ratio, which you can multiply by the selling price to find the contribution per unit. Okay, and apart from that, don't overly focus on the calculation. Analysis are usually of equal number of marks, or in this case even more marks than the calculation. Make sure to do the analysis. They're easier and quicker marks to get, so that you can get a very good mark overall in the exam. So I hope you guys benefited from this, and I'll see you guys next time.